All right, let's go ahead and get started. What's going on, everybody? It's been a while since I've done a webinar. I would say it's probably been a couple of months. A lot of things have changed, of course. I have officially relocated to Puerto Rico to take advantage of the Act 20, Act 22 tax benefits that they have down here. I might even do a webinar on that for some of you guys. There's a lot of you guys that are interested in that kind of information. So you might get a webinar from that or about that particular topic from me. But again, in San Juan and most of the areas of Puerto Rico, most of the cities, they've all pretty much come back pretty nicely. There's a lot of building that is happening down here. There's a lot of items being changed, exchanged, cars, houses, boats, all this kind of stuff down here. Property being rebuilt. There's a lot of things going on, and there's a lot of people that are coming to the island as well for the same purposes as me, and also to try to help out the country and some of the locals here that are still having some difficulty getting back on their feet. So that's one of the reasons why I am down here. More so, obviously, to protect my gains here. So let's take a look at where I was last week. So this is a report here from one of my accounts here, October 4th. So that's the beginning of last week, right? Or so yeah, a couple of weeks ago there, from the 4th to about the 12th. So that's the end of last week. This is where I started, a couple of hundred. And I think this is where the account is now, minus probably, I don't know, 10 or 20 stacks that I lost today, being short some calls and being long some long-term puts. I'm long like February puts on like Boeing, and then I'm long some Nvidia puts as well. So obviously tomorrow I'm gonna have a tough time getting off this as well. Anybody who can't get the audio, refresh or try to do something with your life, learn something about technology maybe. Everybody who has any questions whatsoever, just wait until after I'm done. Probably take about 30-40 minutes here, just going through some trades here, just talking a little bit about the psychology of some of this stuff and where I'm at now versus what could have happened in some of my younger days, and hopefully we can teach you some lessons here about psychology, making money, and trying to keep that money, which is the most important part. We do have a master course coming up on in November. So the beginning of November, it's coming up pretty much in a couple of weeks, two and a half weeks. Starts on the 5th. So again, this is the master course where I focus mostly on tape reading. We bring in some of the flow stuff that Wall Street Jesus is an expert on, and how to trade in and around that. A lot of it is centered on your trading psychology as well. And then we do a whole session on options writing. Okay, and how you write spreads, some of the times where you want to come in these things, and some of the times where you want to lean off some of these things. And of course mistakes will be made. I made some pretty chunky mistakes here on these short calls. I could have sold these short calls for solid profit. I think it was up probably, I don't know, 3 or 4 grand here, and I'm ended up taking a decent loser on this. So again, trading is always a learning process. And sticking to some rules that you set out for yourself. But again, we're human, and that's part of the trading psychology, a lot of the stuff that I'll talk about today as well. Okay, and again, you'll get the live classes, and then you get some live trading sessions as well. So you guys get me to see, just trading live for a couple hours in the morning while I'm in the hot seat, just kind of yelling crazy shit. So that'll be fun too. All right, so with no further ado here, let's take a look at a couple of trades here. What I have this basically just broken down by each contract that I messed around with, and we'll take a look at some of the big ones here. If we take a look at this one, this is your Amazon, looks like 1740 put, and one of the things that I kind of want you guys to just take a look at is how many executions like I'll really mess around with. So again, these are basically your buy orders here. I'm buying $1.20. I'm buying and I'm selling, and then you're seeing the sells here at like three and change. And these are all pretty much you know, just scalps. And when the market is super juicy, you know, there's a lot of opportunity here. So there's one trade in particular that I do want to break down. I think it's the price line. And that one is one that I kind of babysitted for a while. So I kind of want to break that one down for you in detail here. So let's go ahead and try to find this one here. This is this looks like this is all Amazon. Let's see. Let's see what we got on the BKNG. Okay, so that's Amazon. More Amazon, and you look at how many different strikes I messed around with. I mean, these are all executions, and you look at these, you know, 20 grand, 30 grand here. You know, you'll take a look at these losers here as well. You know, so this is just a lot of trading here. So when you guys get to a point where you have your hotkeys set up, you know, and you're really flying out there, you know, of course, you guys can get to see some pretty aggressive action. So here we go. So this is the 1850 put. This is the one that I was kind of just swing trading more or less. You know, and my average premium, my average cost on these was around like 4 and change. And you can't see the buys on these because it stretches back a little bit. So I want to pull up this option and actually show it to you. And this really shows you this sort of gauntlet, the volatility gauntlet here that we're sort of talking about. Luckily, this option is of course still open. So if we take a look at this option, right, this is a 1850 put right here. And you'll look at it over the course of, we'll look at it over the course of the month, and you'll see how widely volatile this thing was and how difficult it was to just kind of stay focused and stay in the trade here. So if you take a look at it from a monthly perspective, you know, you take a look at this. So I'm starting to pick this up at like 4.5 down here. Okay, and this is an 1850 monthly put that I started to piece into pretty aggressively on, you know, the last rally here. So around 1980, somewhere around here, you know, you started seeing me pick up a lot of this, and you know, I started just kind of baby this, you know, and just kind of mess around with it slowly. And you can see basically like I got out of all of this right here. I got out of all of this right here. And the second where I realized, like, oh shit, I have to get back all in, and I'm gonna go ahead and show you what happened on the SPY. We kind of squeezed, we kind of broke down, and then we just kind of squeezed 20 or 30 handles, and it was right here where we couldn't really get back, you know, to those all-time highs. And like most of the tech stocks were really already kind of fading off. Amazon was already fading off and everything. I just couldn't get back in. I couldn't get back in the same size that I had. You know, I had a good, I don't know, I think I had a good like 50,000 at risk, good 60,000 at risk. And for BKNG, you know, the liquidity here is very light. You know, most of these transactions here, believe it or not, they're all me. You know, most of these transactions here are more or less me getting in and out of this thing. All right, so you know, you're kind of competing just against the market maker. And then look at how many times this option flushed out. You know, it hit 20 bucks, goes down to $9, and it did that twice. And then all of a sudden, the next day opens up at 20 and then goes to fucking $80. All right. So, folks, the coulda, woulda, shoulda on this one, it kind of killed me, to be honest. It kind of killed me. This should have been about $500,000, you know, and that was just on that particular trade. I mean, I had shorts on, you know, Amazon. I had shorts on the Google. I had shorts across the board, and you can see the sells here, you know, going at around 18 bucks, 19 bucks, you know, 20 bucks, all around here. And you'll see the buys, you know, me adding even at $11. This is after I already had a cost of like, you know, 4 bucks and change. I was adding on dips. So I purposely wanted to hold on to this thing before earnings. But because of the emotions that continue to happen, I just couldn't sit in this thing any longer. You know, and then what happened on BKNG, you know, a couple of days before, you know, it was a minimal rally. It wasn't anything that crazy. And then boom, it hopped right back up and then just went to the freaking moon here, this particular option. So we're talking about a $5 entry to about $90 here, potential on the upside. Obviously, you're not going to get the whole fucking thing. But most of these monthly options here for Amazon, for Google, you know, for Netflix and all this kind of stuff, they looked exactly like this. How many of you guys had how many of you guys really got hit with some FOMO last week, as well, even as this week, of people who are not involved in the rally, people who are not, let's say, involved in last week's sell-off. How many of you guys really got hit with the FOMO and it kind of put you in a bad mental state and you ended up losing money, or you ended up, making a lot more mistakes because of the mentality that you went through? How many of you guys went through some of that? Gordon here is saying me, a couple of other people here. We're having the same issues as well. And then it's the idea of when to sell these things. I mean, SPY here came off so much. We came off so much in one day. All that happened in one day, and it was literally just panic, push everybody out, and everybody's just going to go, just panic and market sell out of these things. And when that does happen, the volatility becomes huge. How many of you guys have noticed excessively high premiums on most of the options that you're taking a look at? How many of you guys have noticed like huge premiums on the SPY, the SPX, on whatever it is that you're taking a look at? If you take a look at your chain anywhere, you get some really, really high premiums, and that's all because of, when these sort of panic moves happen. Okay, but that's what I love. I mean, this is what I love to do, right? I love to come out when these things happen. Why? Because there's so many scalps. There's so many places where you can just hop right back in, and then you just get further movement to the, to the downside or to the upside. If you take a look at half these trades, this is all just me just flipping in and out of these things and just collecting 5 grand here, 10 grand here, 5 grand here, 10 grand here. And that's literally it. That's all I'm literally doing. Now, there's one other trade here I want to show you, before we get to, some more psychology stuff, is the spread trades, right? And the spread trades I'll go after very actively, okay, if I have certain conditions. If I have certain conditions and those conditions are met here. Okay, so let me take a look at one particular call option. Let's like Wednesday. It should be around here somewhere. Okay. Yeah, this one right here. So this was the 1930 call, played for a bounce when this thing really ripped. Let's see. There was another bigger one here on this one too. This was the 1730 put. Yeah. I mean, you can see me here. I mean, just throwing cash out here, left and right. A lot too on, some spreads here, some writing, and I'll show you guys a bunch of it once I find this one damn trade. Let's see where you are. This is ending cash of that day. Let's see. Where you at? Okay, this one is the 1710 put. Okay, so this 1710 by 1650 here. Okay, so these were some spreads that I was able to write here. All right, and we'll take a look at the short leg here as well. There's some options here. Okay, so you take a look at this one, right? So this one here, it's weird to show because it shows each leg individually here. So I was writing the 1740 put on the way down, all right? And in reality, I got smoked on that thing, okay? But then I was able to come back aggressively and buy this call. So you see this one. So this is 114K in gains on this particular call, okay? So now, here's what I want to go ahead and show you, all right? And this is when the spread games get so freaking crazy that it's very difficult to manage, and you have to also get some long options there as well. All right, so picture this. Market's tanking, right? Amazon is completely tanking. I'm looking at this thing like, okay, it's probably going to chill. It's probably going to stop dumping. So I sell the 1740 by 1710 put, okay? So that means I got a 30-cent spread, and I'm looking for this 1740 put to close out absolutely nothing. And the premium on this was insane, okay? Absolutely insane. We'll take a look at the option here as well. Let's take a look at the 1740 put here. And my idea was obviously to just wait until expiration and get this thing to bounce, of course, and that way I could just burn out of the thing. So if we take a look at the 1740 put, and if we look at it for the past 10 days, right? Look at the premium here on this thing, okay? So literally, I was holding through this. I held my short spreads through this, okay? So I was down about 100 grand on these short spreads, all right? And the only reason I'm able to stick it out is because I'm also shorting calls while I'm shorting that side, and then I'm also going long puts to hedge this short put scenario, right? So you'll see me buying 1710 puts, you know, even lower than that, just to hedge the losses here that are coming down on this thing. Okay, does everybody understand that? Oftentimes when you're spread trading, you're going to get in a little bit early. Okay, you're going to get in a little bit early. Like right now, I'm looking to start shorting calls because, you know, to me the market's run up a good amount, but I'm most likely going to be a little bit early. And if I am a little bit early, it's important to hedge that with some long puts or long calls, depending on, you know, wherever you're getting squeezed. So I'm getting smoked here, guys. I'm down 100 grand on this thing, but I'm also short calls. I'm making money on short calls, and I'm also long puts making money there too. So I was able to stomach the loss on the short put right here, which I was getting fucking destroyed on. And then all of a sudden, we get the monster gap, and then I start sizing into this thing and buried it completely, and absolutely buried this thing, you know, completely. And remember, this is the option that's expiring this week. I had last week, so you know, we're just kind of transposing that kind of activity. Okay, so that's basically what ended up happening. So not only did I protect myself while I'm getting smoked out, I also made all that loss back and then some once that option cratered. This is essentially what market makers do. Okay, market makers are there just to provide the market, right? They're just there to provide the spreads for us so that we're able to hop in and hop out and get liquidity when we need it or when there's none available. But again, there's tricky things that the market makers do there as well. Now, if the market maker is holding a glutton amount of inventory on one side, well, what do they have to do, right? They always want to stay delta neutral, right? So they go in and they either short stock, you know, they buy stock, whatever the hell it is, or they might be in the option chain completely on all sides of the trade to be able to hedge out of their position. Okay, so that's one of the complications with you know, shorting spreads, especially if you're going to do it on high volatile names during high volatile periods. But the opportunity there, if you do have a cool mind, and again, we're going to bring this back to psychology here shortly. You know, most of the opportunity is here because, I mean, look at this volatility. You know what I mean? You're talking about $10 options that have a good possibility of going to zero eventually, you know, and that's why I choose to now focus aggressively on selling spreads, you know, because it's a great way to basically hedge on your long put positions or long call positions, whatever it is, and that way it kind of makes it safer and it kind of makes it cheaper, you know, for you to throw that risk out there on the long side. So for example, like if we're taking a look at this Nvidia that I'm long swing short and basically getting smoked on at this point, you know, what are the things that I can do to hedge around it? You know, you look at all the premium here on this option chain, it's looking pretty good. You know, at some point this thing's going to top out. I can probably collect, you know, $1, $2 or something there. I can probably collect a couple of bucks here on the put side, and all of a sudden, you know, my long put swing now, you know, is now a lot cheaper. Okay, so that's something that I'm working towards, and it's I would say a much more consistent strategy and helping me to at least stay where I'm at, you know, versus having these wild P&L swings that I'm so used to, you know. So, you know, instead of me, let's say, making, you know, $500,000 or whatever the hell it is, and then giving back half or giving back, you know, a couple $100,000 to then try for the next big trade that'll get me to 800 or 900 or whatever, you know, this is kind of where I'm at. This is basically keeps me where I'm at, somewhere closer, you know, so I'm not losing that much on the places where, you know, I just don't have the right read. And then once that market comes back to pay me, you know, I'm in a good position. I got enough cash here. I can really put some shit to work, and my mind is in a much better place than where it was had I made this money and then just lost, you know, 200,000, you know, the day after. How many of you guys take huge losers right after you take, some of your best gains? How many of you guys have made, your best day, and then all of a sudden the next day is your worst day, or your next month is your worst month? How many of that? Absolutely. So it's happening to a lot of you guys here as well. And that's one of the biggest issues here that I definitely wanted to throw out there, in trading this market and trading this high volatility, and trading the names that I'm used to trading, and then trading options in general. Most of the time here, guys, my data on selling options has shown me that basically 75% of the time, most out of the money options, they go to nothing. They go to fucking zero. All right, they go to fucking zero with or without you, and they might have a wide range before they go to fucking zero. So you might be able to make some money on it before it goes to zero. But most of the time you get long an option, the shit's worthless. It's worthless. And we're talking about weeklies here. So again, I've focused a little bit more on adding some time, to my longer term theses, I guess you could call it, and then also, just aggressively writing, weekly options that I do feel like are basically worthless. Now, there's a big issue though with trading, with selling options during periods of super high volatility. Because again, the ranges that you're going to have to deal with are super, super wide. And of course we're looking at this Amazon put here, but you can see, I mean, you're talking about a $5 move right here. You're talking about $1, $2 moves right here. That it's very difficult mentally, to make sure you have the right mindset here to hang on through some of those swings. Now, when you have a low volatile period, so for example, if we're taking a look at this Nvidia, when you have shit like this, or even just a slow uptrending kind of market situation, volatility is much lower, but also the premium that you're going to be able to book on these things is going to be a lot lower too. Okay, so again, you have to be also, sort of understanding the market environment when volatility is a little bit higher. Okay, and then what your strategy is. So for example, like me, I come out guns blazing if it's high volatility. I hate, slow melt up kind of markets. I don't do well during that. I come out guns blazing during shit like this. Why? Because you get some follow through. There's momentum. And there's a lot more momentum than there is on, slow melt up sort of markets and things like that. All right, so this is when I come out and I start doing work. Now, granted, I'm not always going to have it right every single day. Today, I fucked up completely, and I missed the whole move up. So these things are going to happen as well, but it's all good. It's all good. All right, so mentally here, I think one of the things that I wanted to throw out today was just kind of with as you get experience here, you start to understand and you start to remember, how you fucked up all these times before, and you start trying to make little changes here, on how you're moving forward. Okay, so again, managing the winners, it's difficult, and then managing the FOMO, managing the coulda, woulda, shoulda. How many of you guys have the coulda, woulda, shoulda bug? I mean, that coulda, woulda, shoulda shit comes out every single time I step into my chat room, just to talk to even in my peoples. By the way, this is the 1740 put that I shorted. So I came out net up, 100 grand on this. I was down a fucking $100,000 on this. You know what I mean? I was down 100 grand on this thing. And this should be the other side. Where's the 1710? This is the other side of it, right? And I was down. Okay, so this is the other side of the spread. So all in all, after being down 100 racks, okay, on a put spread, all right, I ended up making 62, and then cover that against this. That's what, 30, 34, 36? All right, so you're taking a lot more risk, margin-wise, all right, and max risk size when you're selling options, then you are going long puts and long calls, because that's very defined. So for example, for some of the newbies here, if you take a 10 lot here of, 247.5 here on Nvidia, your total risk is going to be 3 grand. That's it. You know what you're going to lose, but if you go ahead and sell this call, let's say you sell it naked, this shit could go to 80 bucks. And what the fuck are you going to do? What are you going to do? You know what I mean? Are you able to still figure out how to maneuver, when you're getting, when you're getting smacked out here? You know, so that's one of the complicated things about writing spreads, and it's really all about maneuvering and hedging, understanding when you're getting a real move, and then just hedging through it, because eventually you're going to be able to average down, and come out of that option. Most of the time. Obviously, there's going to be times where shit just doesn't come back for you, and that becomes a bigger problem. But again, hopefully your hedges are on point. So, for example, with my Nvidia, let's say I was short Nvidia calls, or let's say with the Amazon, which actually did happen. What I should have done here, all right, so you see these Amazon calls, I'm short the 1870 by 1900. And I was up on these things because, again, like I'm like sitting there thinking, all right, Amazon, even if she does bounce back, she ain't going to bounce back that much. So I'm like, all right, let me write these 1870s here, and then we'll burn it out till Friday. I should be all right, right? And I started getting them at what? You can see the price here, and I think they adjusted down, but I started getting 470, and then my buy side was like 250. So I'm only taking $2 in total credit here. And then, of course, these things went to the freaking moon. I don't know where this thing's trading right now. What is this thing trading? $6. And then tomorrow, it's going to open up at what, 7, 8? Probably going to open up at 7, 8. Who knows? It's Wednesday tomorrow. We'll see where this thing opens up. But what I should have done is what? Why don't you guys go ahead and tell me? What should I have done? Remember, I'm on both sides. So I'm selling puts and I'm selling calls. If all of a sudden you're watching the tape and you're like, holy shit, Amazon could rip, what's the hedge, guys? What's the hedge? What's the hedge? You tell me. What's the hedge? Ryan here is saying, let's see, we got some people saying sell puts, sell more puts. Sure, Nailene is saying sell more puts. So I could have moved up and said, okay, let me go ahead and sell more puts. But most of you guys here are saying, yes, buy calls, buy upside calls. Exactly. Something as simple as that. But again, if mentally you're just like, nah, I'm just going to add to keep adding to shorts. I don't know where my head was at today. Sometimes I'm on it, sometimes I'm not. I think I was working on some other shit, so maybe I wasn't, 100% focused. But yeah, 100% buy calls. Buy calls. I mean, look at these calls. I actually did buy a call. Look at this down here. Right, I bought the 1820 call. I was like, screw it, I'll scalp this thing. But that's not at all what I should have ended up doing. This thing was trading $9, guys. $9 when I bought the shit, and look where it fucking closed. Look at where it closed. All right. So again, you buy maybe a 30 lot of these, okay, and then what's going to happen? What's going to happen? Let's say you buy a 30 lot of these to hedge against your short calls, and you don't bail until the stock really shows you that, okay, I'm done doing this. So you got 30 times 10. That's 30 grand right there. That's 30 grand. That would have covered my short calls. That would have covered the loss here completely, and I could have averaged down. But of course, I'd be looking at a gap up. So who knows, But again, you only want to be able to hedge or bury the position too. You could always do that too as well. I mean, that's always a great, that's always a great strategy. There's also another thing that I started to do. It's like if I start to see one of my short spreads not working out, what I'll do is bury the short side and then leave the long side. And it only works on names like Amazon or names like Google with super high volatility, because you can spread it out like this and still make money. Obviously, this is 30 points back out. Like if it was a Netflix or Nvidia, you might not get that much juice on something that's that far away. But again, what you end up doing is just change the trade, right? So it is a spread. If I bury the the short calls and just leave the long calls, well, I take the loss here. But provided I'm doing it at the right time, I'll make the loss back. I'll make the loss back on the long call side, and then maybe add in some calls or whatever. But you have to be able to stick and move. How many of you guys have a hard time, changing your bias, changing your perception, and basically just pivoting, pivoting to a different perspective? There's a lot of people that have a very difficult time with this. And again, you're not going to get to that sort of next level here in your trading, especially when we're talking about options, because look at how quickly this market changes. I mean, yesterday they got everybody to kind of short into the hole, and then today we gapped up 25 fucking handles, and then the market ripped another 40 handles on top. You know what I mean? So for a collective move of 60 fucking handles up. And that was a complete reversal from what we saw before. And And the fucked up thing is you kind of see it coming, you kind of feel it. You're like, oh, something's going on here. And then sometimes, even at the last minute, you can't stick and move. You know, sometimes you're not going to be able to do it. Other times you will. And again, you just have to slowly get better. Guys, we're humans here. We're humans here, and it's the, you know, you cannot expect yourself to be 100% as far as decision making is concerned. And this is why people have now created more of a hybrid strategy of having some algos and having some execution strategies, some buy programs, sell programs, whatever the hell it is. You know, so they can keep themselves on an even sort of mental state. And that really is the most important part. So now, like, I'm getting better. I'm getting better slowly, just burning losses and just getting rid of them. It's just like, you know what, fuck it. Let's just get out of this. Let's bail it. Let's take all this stuff off, and then let's start from scratch. You know, there's nothing wrong with that. The problem is just when you get too attached, you know, you can't let it go. But with the writing strategy, you know, I can still get attached and I can still make it out of it. You know what I mean? I can still make it out alive. I mean, I was down 100 grand on this. Dead ass. I was down 100 grand on this, but the only reason I was able to stay in it was because I was making that 100,000 back. I was making that 100,000 back by flipping and continuing to play on the short side while I was getting smoked on this short put. So I was still buying, you know, 1720 puts, 1700 puts, you know, making 10 grand here, making 20 grand here. I was shorting calls, stomaching all this loss. And then all of a sudden, you know, Amazon had that one day where it just kind of ripped, and that was all she wrote. You know, that was even a tough day too. It was one of these days too. It kind of came back to like almost where my cost was. And then boom, you know, it just kind of rallied. All right, so let's take a couple of questions here. And again, during the course here, you're going to get a much more in-depth explanation on how, you know, where picking, you know, the strikes that we want to go after. What is the goal here for the writing strategy? There's a way to do it much less risky than I do it on this particular account. So I have another account where I just write super far out of the money calls and puts. And I'm just going for nickels and I'm going for dimes. You know, I don't do any of this crazy shit that I do over here. So, you know, with a $50,000 account, $25,000 account, you know, you can make some real good money on a weekly basis as soon as, though, you know, you start allowing yourself to see those gains, you know, add up here. Because most people with a $25,000 options account, they want to go balls to the walls and they want to do this crazy shit and they want to do all kinds of nonsense that gets them in a lot of trouble, which I'm sure you guys can raise your hand and say, hey, I've been there. Okay, so Tim here is saying, mind talking about today for you and explaining your miss on the upside. Yeah. So honestly, I'm gonna say that in the morning when I saw the gap up, I was like, dude, if we get through that 277, I think I was just like, dude, we're gonna really start moving to the upside. So I think in my head, Tim, I was just like, you know what? This is fine. We're going to move up, and I'm going to be able to add to my short swings. So I think I'm right now pretty biased here on the short side overall, and I think I always have been. So, you know, that was my intention. I was like, you know what? I'm going to get a cheaper price anyway on this Nvidia, so that's fine. You know, this is not a big deal. And even for the Amazon, I was so far out of the money that I wasn't really concerned with it, to be honest. And then it was just this kind of slow grinding melt up. I had some other things that were going on today, so I think I just kind of let my mind wander, and you know, I just didn't see how powerful it all was until, you know, we got to like 279 on SPY later on in the day, and then I was like, fuck, you know, what am I gonna do here? You know what I mean? What am I gonna buy? I'm gonna buy up here. At that point, I was just like, all right, fuck it, let's just see what happens, and you know, we'll wait. You know, we'll wait until tomorrow, kind of thing. So Tim, I'm still thinking in my head like, you know, all right, I'm gonna go ahead and average down some of this shit. But now with the Netflix thing, you know, this kind of changes things. Netflix being back over 386, you know, now you're talking about a candidate that may go right back to all-time highs. If she goes back to all-time highs, then, you know, then the sentiment here, you know, especially for shorts here on the Amazon, the BKNG, the Google, or whatever the hell it is, you know, the sellers are not going to just pop back up, you know. So luckily, I got a lot of time on these Nvidias and the Boeing. I'm out to February. I'm out to all that kind of stuff. So I'm going to keep adding. I'm going to keep adding for now, and I'll keep hedging slowly, by messing around on the weeklies. But yeah, Tim, I'm not happy about missing the long side here, because in reality, I could have just hedged my losses there, real easily, and just stayed even. But I'll figure it out here by the end of the week. Steven is saying, how do you deal with your losses mentally? I mean, dude, everybody is different, right? Everybody is totally different. Me, bro, like if they're bad, if they're really bad, and again, I'm not fucking around. You know what I mean? I'm super honest, and that's how I teach the course here as well, because there's no way, there's no there's no reason I should try to sugarcoat this. I mean, I'll tell you a story, right? I met this chick down here in Puerto Rico, and she does Forex, and right now I'm like putting the quote sign up, right? Because it's just an MLM company, right? She works for an MLM company, and you guys know, you guys remember when Ronaldo posted on his fucking Instagram to use this Forex platform, right? I mean, Forex now is one of the largest products for MLM companies in every fucking country that you visit. Africa especially, Europe, it's huge, and all over freaking Asia, you'll see it everywhere, right? And this chick was literally trying to tell me with a straight face. And again, I know trading, right? I mean, this is my world, right? I've done it, and I've seen it all, and I'm doing it currently, right? She couldn't show me one trade, she couldn't show me anything. And she was like, yeah, I'm projecting, to make 3 million, by the end of this year. And she's just poisoning tons of people, into buying into these sort of systems. And again, I say that by saying that, it's different for everybody. It's different for everybody, as far as losses is concerned. It's like most people will promote trading as a situation where you're always going to make money, or they'll only post the good shit. They're not going to sit there and say like, I fucked up here and I lost 20 stacks. Nobody's going to say that shit. Nobody, not one person. I mean, there's might be a handful of people, but nobody's going to say that shit. You know what I mean? Because it's not sexy, and whatever the hell it is. This girl makes her money on monthly fees, for everybody that she's trying to push into changing their lives and living, transforming their lives, and all that kind of shit, right? They sell the lifestyle, and they get you into this stuff. So from the losses perspective, I look at it as just throw it out there, man. I think, Steven, the best way to handle losses is to just boldly say that you fucked up. You boldly say that you fucked up. You boldly tell people in your room, or whatever the hell it is, or maybe your support system, or whatever it is, that you fucked up. I think that's one of the best ways to do it. And it's like, you know what? Yeah, I lost the 10 racks. I know why I lost the 10 racks, and I'm a fucking idiot, but this is not going to happen again, and this is how I'm going to change it. I think the more you try to stomach it, and the more you try to say to yourself like, oh my God, and try to really just amping it up like inside your mind, and yeah, letting it fester, and it's almost like not having a simple conversation with somebody because you want to fucking avoid conflict. You know what I'm saying? How many people do you know that can never be honest with somebody because they just want to avoid conflict, and it makes them feel fucking uncomfortable or whatever? Like, that's what you need to do. Like, go towards the uncomfort. Whatever feels shitty, go there. Go that way. You know what I mean? The more you go that way, you'll be like, oh, you know what? This is really not that big of a deal. So, Steven, for me, how I dealt with my losses mentally was the simple realization that as long as my mind is intact and I'm not out of my fucking mind, like, there's money everywhere, man. Dude, I messed up. I lost 20 grand today. Who fucking cares? Who cares? Tomorrow, Amazon's going to move another 30 fucking points. Look at how much it moved today. It moved 60 points today, and it's already going to gap up another 20. Like, this thing's going to move Who knows what she's going to do? And this is what I trade. I might trade a bunch of other names, but the ranges are crazy. So who cares? Who cares? You know, but again, it takes a while to get to that. And I appreciate the fact that not everybody is there, of course, and not everybody is able to look at a loss like that and be able to handle it that way. You know, but again, Stephen, the attachment to the actual money versus the potential of what you could do. I mean, I think that's more or less it. You know, so you have to have the confidence that when you come into this market, or you know, whatever kind of environment it is, you know, that money is there. The money is there. We know the money is there. You see it every day. You see it every day, right? Do you not? You see it every day. Okay. You know, and it's just a matter of making sure that you're in the right mindset. And if you are, some of that money is yours. Hayden is saying the Amazon 1740 put. Did you buy the 1710 hedge at the same day? Absolutely, absolutely. So when I'll go ahead and make a let's just go ahead and mess around on this, right? So what I'll do is I'll go ahead and just sell the spread outright and just make it a quick vertical, right? And then I'll just fuck around with the strikes to get it to where I want it to be, and then I'll see what the spread is. You know, and I'll try to do this as quickly as possible. Sometimes you'll get it nice and easy because the spreads here are not that complicated. So some of these I might just go market in with a 10 lot or whatever in the beginning, and then just shoot it out there and then slowly baby it. Okay. So when I'm getting in, I'm always getting in at the same time. Okay. And now, as I'm collecting, or if I'm adjusting or something like that, then I'll go ahead and I'll pull up the individual. Then I'll be like, all right, fuck, you know what? I'm going to go ahead and bury some of these and then leave the long side, and then I'm going to fuck around like this. You know what I mean? Like, then I'll mess around like that. But initially, I'll always put them out there like this. Okay, I'll always mess around with it like this. And then that way, too, like, you know what your risk is. So, for example, like 20 spreads here on a 10 lot. You know, I know my risk here is what is that? That's 20 grand. Is that 20 grand for the 10, or is that 2 grand? I don't know, one of the two. I'm adding a zero here or there or whatever. I think it might be 20. I'm pretty sure it is 20. Maybe it is, maybe not, or maybe it's 2. I think it's 2. Maybe it's 2. I don't know. But again, like for getting into these things, I'll do both at the same time, and then I'll adjust as I need to. Roberto was saying, on your BA swing, what did you see? Did you see weakness? I'm trying to understand why short a strong Trump stock. I mean, again, Roberto, like, just by your question right there, I know that you look at stocks from a fundamental perspective. You know, I know that you look at stocks from like what they should do, or what they, you know, what somebody else believes, or what the market maybe has told you, you know, time and time again. For me, in my head, fuck Boeing, and fuck this move from. Look at this. What is it? 2 year? What is this? This is $440 to fuck this thing. Okay, that's the only way I look at it. I don't look at it as, oh, this is a Trump stock. Oh, this is this, or this is that, or whatever. That's not what I look at. You know, I look at pure tape. I look at, hey, if my market now has topped out, which I do believe it has, and again, I could be completely fucking wrong. If my market is topped out and now we're going to just sit down here at 275 or 280 or wherever the hell it is, then I, you know, in my head, I'm like, whoever's stuck in Boeing, and by the way, every single hedge fund, every single mutual fund, every single investor, just like you yourself, is in this fucking Boeing. You know, if all these people decide, if there's one more panic, let's say this thing gets down to 340, you think people are going to buy this shit down here? There's going to be panic on this thing too. You know, and it'll dump right back to 300 real quick. So I want that move. That's what I want. And I don't care how long I have to wait for it to happen. But that's how I trade, you know. You, my friend, you might be like, okay, it's a strong Trump stock, so I'm going to go ahead and buy the dip right here. But that's what makes a market. I don't give a fuck what you're doing, bro. And that's not my business. That's not my business. I don't care. The only thing I care about is, what am I doing? Does the tape support my thesis? And if it doesn't, fuck it, take the loss. If it does, add more and try to make $1 million. That's it. I'm doing the same shit you are. But I don't give a damn what anybody else thinks. I don't care what anybody else wants it to happen, or it's a Trump stock, or the shit's on CNBC, somebody pumped it. I don't give a fuck about any of that stuff, all right? My game is pure tape. Everything is tape. So again, that's you know, something that we focus on there a lot, and it's all just bid and ask. Right now, obviously, market is rallying higher, this Boeing does look like a freaking dip buy at this point. So I got to reassess, tomorrow, maybe the next week, and then see what's going on. Remember, I have a February put on this thing. So who knows, man? Who knows? You might be right, but does it matter? I don't care. Bro, again, it's not about right and wrong. It's not about the should. It's not about the coulda, woulda, shoulda. It's not about, oh, this is this stock, so we have to go ahead and buy it. It's not about any of that stuff, all right? And again, through my course and through, the way that I teach, you start to separate yourself from all that nonsense, which to me doesn't fucking mean anything. The Ramesh is saying, how do you know that the tape is topped out? Well, you'll start to see a lack of bids, and you'll start to see sellers start to control that tape. And again, this is stuff that you will learn during the master course. Let's see. So what anybody else? Questions? There's tons of questions here. What do we got? 6 here is saying, are you a net buyer, net seller? If it varies, how often and to what degree? I would say that's a good question. I would say I'm 60% seller, 40% net buyer, and that's just because the volatility has increased. So I would say the underlying variable on that one is the volatility. So if the volatility is crazy, I'm going long puts and I'm going long calls. If the shit's whack, which most of the time it is, I'm just selling some shit. I'm out there just selling some shit. Okay. Hayden is saying, you said you have another book where you sell way out of the money options. Are those nakeds? Oh no, those are spreads too. Those are spreads too. You're only able to go naked when you have at least $5 million, guys. $5 million will buy you unlimited anything. All right, and that's the market maker minimum. So if you want to apply to be a market maker, the requirements are that you have at least 5 million in capital, and then with the 5 million in capital, they let you do whatever the fuck you want to, so you get unlimited leverage. You can do whatever you want to. So some brokers will give it to you with like a couple of mil. Some brokers will give it if you have a good track record and all that kind of stuff. Then, they might give it to you, but if you got a couple 100,000 or you got 100 grand or even 25, like you have to do spreads. You have to do spreads. Yes, it's going to cut down on your gains, but again, we're looking at consistency here. You're talking about consistency. Most of the time, guys, obviously, forget about this super volatile time where SPY is trading up 60 and 60 handles and down 60 handles. When it's during times like this, most options, most out of the money options on most names, they go to fucking nothing. You guys know it. You guys know. I don't have to tell you. You guys know it. Half of you guys are stuck long these fucking things, and they go to zero, and you don't sell them, and you go down the ship with these things. So the better place to be during those low volatile periods is on the sell side. Hayden is saying, will you match the maturity on your spreads or have it be a shorter dated one? It depends. It depends. Most of the time, shorter dated. Because we're only talking about a option with the expiration, a lifespan of 5 days, 6 days, or something like that. So that'll be the easy ones. Let's see. Any other questions here? Anthony's saying, yeah. Vince, this is no different than how high stakes poker players feel about that. No doubt. Roberto, let's see what else we got. Pablo here, ¿cuánto dinero has dicho que necesitamos? How much money you say we need, 20K or 200, and what percentage of your account you win with that 200K? I mean, again, it depends on how aggressive you want to be. So if let's say you got 20 grand, right? Let's say you got 20 racks and you can do spreads, okay? And you can actually do spreads, okay? You're definitely going to be limited on the names that you can trade, and then how much actual, pennies or nickels or whatever you can get for these spreads. So, for example, like let's take this Netflix, right? And let's assume this shit has not happened, okay? And let's say Friday you got till expiration, right? And let's say you have, let's say you think the stock is going to basically close around it is, and you want to go ahead and sell a 370 by 380 short call, and let's say you want to go ahead and sell a 310 by 320 short put. You're probably going to make like a dime or 20 cents on both those sides. And let's say you do it on a 10 lot, you're talking about $400, $500, something like that. But it's going to take up a good amount of your leverage. You're only going to be able to make a couple more trades off that. you know. But it's a much more consistent strategy than it is trying to figure out, like, okay, when is Netflix gonna, rip to 400 bucks? When is this gonna happen? When is that gonna happen? It's much easier to bet where something can't go than where something can go. Okay. Sean is saying, I'm long the Amazon 1790 weekly put. A lot of pain right now. What would be your best play for the rest of the week? I mean, again, you're kind of in the same situation that I was, or am. You should have hedged that position. So, but again, we can't talk in coulda, woulda, shoulda. So tomorrow you're gonna have to open up. And if you want to hold this, remember you're in a weekly put. So your shit is going to be worth absolutely fucking nothing. And Sean, I'm gonna use you as a great example here. How much did you pay for that 1790 weekly put? I'm gonna just jump out on a ledge here and say you paid like $10 to $20 for that option. Am I right? Yeah. So you paid 19 bucks for that option. Where the fuck you think this option is gonna open? And guys, this is most traders. And Sean, I'm putting you out here on blast, but this is shit that, again, unless you have the right account size or you're hedging properly around it, this is the shit that eventually here you're gonna die. You know what I mean? There's no longevity for you in this equation. So this man's long from 19, right? The option already closed at fucking 12, and we already know this thing's gonna open at $5 tomorrow. So the likelihood he needs a huge tank here in the market just to get even back to break even. So this would mean he's got to average down at what, $5, maybe even 4 or less than that. Get his cost down to 10 bucks, and then pray for a move back down through 1,800 bucks. But now you got what? A situation where the market has just rallied. Okay. You got a situation where Netflix here just posted great earnings and is back to wherever the fuck she's doing, right? And then this thing's already up 20 points. What the fuck? What kind of, you know what I mean? Like this is most traders right here. And Sean, I'm glad you put it out there because we can all learn from this. Everybody here can learn from this. This is most traders right here. You'll buy something because of a feel or an idea, which is great. You might have a good idea on something, but where's the execution? Where's the execution? It's like, okay, if I'm buying a weekly fucking put for 20 bucks, all right, number one, you have to understand what you're paying, why you're paying the expensive price that you're paying, okay? And you have to track that back to what the tape is looking like, And again, this is all stuff that you guys will learn, understanding premiums, why something is that expensive, how to look at the tape and be like, okay, is the option fucking worth 20 bucks? And that's one of the most valuable questions that you'll be able to ask yourself. You'll look at the option and be like, holy shit, this thing's 20 bucks. Should I take it? Should I not? Sometimes you're going to be able to take it. Guys, when this market was tanking, I was buying $20 options and selling them at fucking 30. I was buying a $40 option and selling it at fucking 60 because it didn't matter the price. It didn't matter. Okay. But now you're going contrary here. This thing is cost 20 bucks. And the perception of this option as this stock just ran away is fucking nothing now. So the perceived value of this option is fucking nothing. I will make a bet right now with Sean or with any of you guys here that Sean is going to go to 0 on this option, and I will bet anybody. I will bet anybody whatever. I'll give you 2-to-1 fucking odds on this bet, and we'll bet for 100 bucks. I will bet you that this option goes to 0, and there's no coming back here for Sean on this option. Okay. So again, I would use this example if you guys are at that situation or whatever the case is early on in your trading careers. This is your death right here. This is it right here. This is it. All right. This is it. All right. So if this is you, you're already digging your graveyard right here. This is you, and this is the graveyard. You know what I'm saying? This is the graveyard, and boom, your shit is gonna go to 0. Now, Dharmesh is saying, how do you hedge that? All right. So tomorrow you got to come in and be like, okay, maybe we're gonna get a stretch on this Amazon if the market continues. Maybe you start adding some long calls, but that's going to be tough too because premiums are going to be high there as well. So you're going to get smoked here from theta on both sides. I think the best way is to short around it. So now I would say short something that's farther away. So he's short the 1790, he's long the 1790, maybe short the 1770, maybe even short the fucking 1800, maybe try to do something like that. Calvin is saying, why not try to roll it and say a prayer, right? So now here's the other thing, right? A lot of you guys are like, yo, just roll it. People don't get the fact that rolling it means you take the fucking loss. You take the loss and then you put the cash into the next week. So why not just dump the position, because it fucking sucks? Why stick with it unless you're, of course, planning to add to it and trying to make that money back? So yeah, Calvin, you know, in that instance, I mean, that's the same thing that I'm going to do here on the Nvidia and the Boeing, but this is only because I have till February on these things, you know? So I can get a better cost, average in, and if I'm still right on the sell-off, which, by the way, fuck Nvidia, okay? I don't give a shit what you guys say about semiconductors and all this fucking Bitcoin. I don't care. I don't care. Fuck Nvidia. She's going to 200. If she goes back over 260, I'm screwed, but I hate this thing, all right? Screw this thing. As soon as this tape gets a little weaker, you know, you'll hear from me. You'll hear from me soon enough. Okay, so that's his options. So that's Sean's options. I would tell Sean, go ahead and short some strikes, short some put strikes that we know are going to go to fucking zero anyway. You know, and see if you can collect some of that money and take some of that money back. But by the way, there's nobody here that wants to take my bet. Anybody here that wants to take my bet? Come on, I'll give you 2-to-1 odds on $200 that Sean goes to zero. Somebody got to take that bet. Come on, I'll PayPal you the shit. I'll Venmo you the shit. Whatever. Come on. Dharmesh is saying, what is your max pain point on Nvidia and Boeing? You know, I would say, and again, I'm a tape guy. So once you start to understand tape and the markets, you really start to put things together into a perspective that is much easier to understand. So for me, my out on Boeing and my out on Nvidia is all predicated on the market. Everything is predicated on the market. We got all these earnings that are coming up too, you know. So for me, if the market goes back to 285 and to 286 where the sell-off started, then all bets are fucking off. All short bets are fucking off. Every single one of my short bets is off. Why? Because that was just a big smoke out, and they just went for margin call on tons of people that were over levered, and we're going back to all-time fucking highs. And if we do go all back to all-time highs, I'm gonna fucking throw up. But at least I'm not going to get my ass kicked here, and you know, I'll start to flip sides, I'll start to sell puts, you know, I can still make it out. Let's see. Dan is saying, when you look at the tape time and sales, do you have a volume limit set on there, or do you see every single transaction? There's no way. You're one human being, bro. There's no way you can see and analyze every single transaction. And again, the way that I teach it, you know, you'll see once you take the class, you know, that we're looking for specific things, and we're looking for, you know, we're basically looking for consecutive type of activity. That's kind of what you're looking for, flow. That's basically what you're looking for. Cole is saying, do you think next time I flip an account from 1 to 20K, try selling, since after a huge run, premiums juice and now have some margin for spreads? Sure. I mean, do you flip 1,000 to 20K often, bro, and then just fucking lose it? Who are you, bro? Like, who are you? So you flip an account from 1 to 20K, like, dude, if you flip the account from 1 to 20K, I'd keep flipping, man. Like, you just made 2,000%. If you can make 2,000%, I'd just calm the fuck down and wait until you can make another 2,000%. But I'm telling you right now, that's not sustainable either, because your ass wouldn't be in here if you were a 2,000% flipper, which you ain't. Sim is saying, with crazy volatility swings, how long are you holding if you are right or wrong, or it doesn't matter because of time on your contract? Yeah, so for Sim, for something like that, for, you know, these Februarys and stuff like that, like, I have so much time that I'm not worried about it. I'm not worried about it. The only thing, again, that I'm worried about is the sentiment. The sentiment. What's the sentiment? Is the sentiment of the market that we go back to all-time highs? If it is, then it doesn't matter how long time I have on Nvidia. That option's going to zero too, because this Nvidia is going to go right back up to all-time highs as well. You know, Dharmesh is saying, you just go out for flow and sentiment, or do you look at charts and patterns? I don't do charts. I don't do patterns. No, there's no technical analysis in the course, as you can see. and there never will be. You know, I don't have anything against chartists and the technical people, but you know, there's a much more, there's a much deeper understanding of the markets behind your charts. Remember, the charts are created by tape, all right, by transactions, by the flow of transactions. All your studies, all your little technical mumbo jumbo, all the little Vietnamese kids that are being employed to draw and color these lines here for you, okay, whatever the hell this is, all right, there's people being paid pennies on the dollar here to draw these lovely colorful lines for you. All of these studies here are made from price. They're made from price, and they're made from tape or some kind of a mathematical computation of what is happening on the tape. So why mess with anything else besides the tape? Okay. No, really, look it up, guys. This is it. They pay people they pay these young 5-year-old kids, all right, in places like Vietnam and places like the Philippines, you know, these poor kids. And they just pay them to sit on these programs and to draw lines here for you. So that way, when you click these things and it says, oh my God, you have a Bollinger Band, that's actually a drawing from a 5-year-old child. That's actually what it is. Pablo is saying, imagine that you, Lucci, have only 1,000 cash account, but you have all your current experience and knowledge. How long do you think it would take you to get from 1 to 100,000? Why even ask this question? Why the fuck even ask this question? Listen, if you got $1,000, with my experience and my knowledge, how long would it take me to get to 100 grand? The better question is how long would it take for me to get to 0? Okay, I can answer the second one. I can answer the second one real fast for you. You know, you might take the 1 grand to 10, you know, and then blow it out to 0. You might take the 1K to 20, just like our boy, what's his name here? Who was it here? Damn. There was another one up here. This is like our boy here who turned 1,000 into 20 grand. Yeah, Cole here, right? He turned 1,000 into 20 grand. And then I guarantee he went back to 0. Okay, here we got some color here for him. He did it 8 to 20 times apparently, but keep blowing up after a big run. And I love the fact that you're so open with this stuff as well. Did an account $400 to 12 grand. No PDT in Canada, but went for the climb past 20K and got caught, and then went back to 0. So I mean, again, like, you know, you guys are sitting here listening to this stuff, but I'm willing to bet you guys ain't that far off. You know what I'm saying? So because again, I've been in this game long enough to know who my audience is, and my audience is filled with people who started with $1 grand, got to 10 grand, fucked something up, and now they're back here to try to get more information. The information that you're looking for is psychological. It's mental. It has nothing to do with your strategy. It has nothing to do with any of that. All right. It has to do with the fact that you're a fucking idiot. You're an idiot, and you have to accept this as a human being in order to move forward in life. You know what I mean? And most of you guys can't do this. So this is why you need to pay me $3,000 to tell you that you're a fucking idiot and you can't do this. You know what I'm saying? That is exactly the ass kicking that you need in order to actually do this shit. That's what it is. Okay? So most of you guys here are in this scenario here. Some of you guys, of course, are looking for the knowledge. I will give you the knowledge to understand how to move and how to make your own strategy and how to get the confidence. That's all you need. Because somebody who's just like Cole, for example, who gets his account to 20K, you know what happened to him? Mentally, he looked at that 20K, he got a little scared, he got a little gun shy, whatever the fuck it is, and then, you know, maybe the market changed or whatever, he was expecting the same thing, and he put up that 20K to risk completely, and he lost it all. You know what I mean? So this is, his thing is not that he doesn't know what he's doing. His thing is that, you know, maybe he got some luck and he's just an idiot, just like the rest of you guys, just like myself. And again, this is what you need. You need somebody to smack the shit out of you. Okay, you need somebody to give you a deeper understanding of what's going on and to give you the confidence here that you can take whatever strategy it is, whatever environment it is, and make some fucking money. Okay, T-Pro is saying I went from 4,000 to 33 and then back down to 4. I mean, guys, now finally you're open with saying these stories because other people are open with them, but every single one of you in here has this same story. And so there's not a, it's not a surprise here. It's not a surprise. We all have the same story. So again, how do you move forward? What is it that you need to do to move forward? Okay. Let's see. Hector is saying, what is the time frame for the course? For the course, we got 12. It'll take about a month. It'll take about a month. Right. I have one of my favorite guys here in my chat room. His name is Vinny. Let's see. We can pull up the chat room here. His name is Vinny, and he manages a good sized book right now. And there's a lot of people that I coach mentally, and I don't expect shit. Once you're in here, you're mine. You're basically mine. Okay. You're mine to do with as I please and to help, or even say you're a fucking idiot and get the fuck out of here. You know what I mean? Like I don't need your money. I don't need your money here. I don't need it elsewhere. But this is what I do for people who have an interesting problem, for people who have been through some stuff, for people who are trying to get somewhere. This is what I do. So I have a guy here, Vinny, who turned 50 grand to 700 grand. And then fucking got shithouse back to 100, got shithouse back to 100 and 150, and this happens to a lot of people. And, it's how do you come back from that? How do you come back from that? How do you mentally just throw away the attachment to where you could have been or where you should have been or all that kind of stuff? And we're all dealing with that. Every single one of us is dealing with some story that is similar to that. So if you don't address it head on, by looking at this problem and exposing it and saying, hey, this is how I fucked up, but this is how I'm gonna turn the corner, then you should just stop. The best thing that I could do for you is you pay me the 3,000, and I'll tell you just by the words that you use if you have any shot of fucking making it whatsoever. Okay? That way I'll save you from burning your whole fucking trading account. That to me is what you're really actually paying for. Okay? Now again, you're getting a lot of knowledge, 100%. Okay? But listen, this is more about the mind state, the fact that you guys have been here, and how you're going to turn the corner. Okay? Ranchero here has the same story. I have a lot of other guys in here. Ranchero is a 7-figure trader. We have, I myself, I'm a 7-figure trader. There's 7-figure traders here in this room that all have even worse stories than you guys have ever had combined. But it's not a competition. It's not a thing where it's like, oh, you only lost 20,000. Like, well, dude, to that person, 20,000 was their whole world. To Vinny, $500,000 was his whole world. To me, $1 million is my whole world. Whatever it is, it's all relative. It's all relative. So I got 7-figure traders in here who all come to me for the same fucking reason. All right? The same fucking reason. And we all work on this shit together, and we all check each other together as long as we all believe in that goal, in that end goal, and in that understanding that it's us that we have to work on, and sometimes we can't do it all ourselves. You know what I mean? Sometimes we can't do it all ourselves. And most of the time, actually, you can't. So that's why we try to help each other out. There's some people here that I have learned a lot from too, but only because you're open enough to share and you're open enough to say, hey, you know what, this is where I'm having issues with. Most people can't even get that far. So that's where you're at. Once you come into the ecosystem, this is what you're looking at. You're looking at a further understanding of the market, and you're looking at a further understanding of yourself. That's in reality what you should be paying for. Okay, let's take a couple more questions here and then kill it. Joseph here saying, what would you take from seeing a few million shares being sold right after the market closed? I use quotes on being sold because somebody had to buy the shares in order for it to be sold, blah, blah, blah. I saw this yesterday, dipped down a lot after hours. Some of these might be the closing print. So some of those you just might be looking at the closing print. So every stock is going to have a volume candle here right after the close. And that's just the closing print. So that's the market on close orders that happen. If you see a huge volume order and it's a live order, after hours, yes, there's stuff that you can take into it, but you still have to wait until the next day to confirm whatever theory it threw out there. Tim is saying, how much do you factor in the big option flow to your daily thesis, or is it only tape? You know what? I'll say it right now. Like I don't use it as much as I should. I do not use it as much as I should. So for example, on a day like today, it was really all buying. Everything was just buying, and I saw it, and I saw the melt up too. So 100%, like I should be using it more, but I'm so used to kind of like just doing my own thing. Some of this stuff, when it hits, I'll be like, whoa, this is different, or this is interesting, you know, and then I'll start to paying more attention to it. So I would say I don't use it as aggressively as I should. So I'll probably start really incorporating some of that. I mean, I know a couple of times I make some huge trades off of weekly shit that Jesus puts out there. So if he pops a weekly option, on a friggin' Netflix or whatever the hell it is, like, that shit I'll pay attention to. All right, let's see. Cole here, you're going nuts. Ryan here is saying, anyone on the brink of taking the course or not, take it. Huge transition in my trading. Oh, wow, look at this. Free promo. Lucci gets the strategy questions answered and works on psychology. After the course, it's all about how you control your emotions, which is the biggest factor to control of all. And that's unpaid right there, guys. Cole here, let's take the last question. Let's actually go for Donomesh here. Will this class help people that trade on longer time frames, like 4 to 7 months? Absolutely, 100%. And again, like, you see what I'm doing. I'm also doing the same thing. Most of the time I'm trading with that thesis in mind. But Donomesh, like, it'll help you transition and move like you need to. So even if you have a 4 to 7 month horizon, you still have to move around an option to get the right price. That's one of the most complicated things that you'll do when you're swinging something. Because if you're swinging something on a 4 to 7 month basis, most of the time you're just sitting there watching the option. You're just watching the option, you're watching the players in it, and you're trying to get a feel of the actual environment, okay? And then on top of that, all right, there's strategies to help you mitigate a lot of that risk that you're taking for the 4 to 7 months and all that premium that you're paying. So let's say you're paying $3 or $4 for an option. How do you slowly cut that cost down as you get towards your expiration? And then what happens if you have a 4-month time frame and the freaking option is just burning from theta? What do you do then? All of this stuff, and then combined with what is the market doing, the environment doing, it really helps you to get a much better understanding of where you should take those positions. Where you can get the best price, all that kind of stuff here. Vinny is saying, Lucci will fix your mental state. It's you versus you who stands in between you and your success. And this is all, yeah. I mean, these are all guys who have taken it that are here. You guys can talk to these guys too when you get in the chat room. So if you guys want to talk to anybody who has taken the course as well, just hop in here and talk to any one of them. And then hopefully we'll see you guys in there. We start on November 5th. I think we are running a couple discounts, but go ahead and email charlie@sanglucci.com. Okay, I'll go ahead and send out the email. And then that way he'll let you know if there's any, I think we might be doing like a $500 discount or something like that. Okay, so go ahead and email him if you guys are interested. He'll give you all the rest of the details. You can go ahead and pay for it right here to sanglucci.com/MC. And we'll see you on the next one. I'll be doing a couple more here to gear up for the class. And then I'm also speaking at this event down here in Puerto Rico. It's called disruptweek.com. So I'll go ahead and drop some of this for you here as well. And it's just basically a startup conference here. It's about 7 days here. From all kinds of different walks of life and all kinds of different businesses as well. So Puerto Rico has a lot of cool things that are going on here too. I think you'll see me down here somewhere. I think I'm right here. I gotta tell them to change the name or something. So I'm speaking here at this particular event. I'm also trying to get a little bit more active, you know, in the community down here as well, the startup community down here too. This will be in San Juan, and it'll take place for 7 days. If you guys do want to attend, I think there's some VIP events too, so you can go ahead and email me, email us. And we'll let you know. Jordan is saying, how often is the master course? I don't do it that often, man, because I don't, you know what I mean? I don't have that kind of fucking time. I don't want to do this shit all the time. You know what I mean? So I got other things that I'm trying to do. You know, so we'll do it like every 3 months, maybe every, you know, something like that. But they are recorded, and everybody who takes it, you get basically unlimited access to it. So any of the classes that we decide to do going forward, you just have to email us, and we'll drop you right in there too. So anybody who's taken the class previously, you know, they can join the new ones as well. All right, guys, take care. Look forward to the recording. And if you guys have any more questions, go ahead and email charlie@sanglucci.com. Tomorrow and the rest of the week are going to be hilarious and filled here with opportunity. So make sure you come with it. All right, guys, take care.